right, well, hello, guys. It is trading room time midweek update, the 22nd of February. It is a faster month, right? There's only 28 days in it, so it does go quick. I just wish that the cold would go with it. Hopefully, you guys are staying warm. We're having a pretty good storm here today, but let's get into the market storm more specifically, right? It's been a couple of interesting days coming out of this holiday. Folks, take responsibility for the outcome of everything you follow along. You know the drill. So let's do a quick recap. So the markets dropped strong after the holiday weekend. This actually coincided with an options expiration cycle. We've been talking about this put-call ratio for a long, long time. And I don't think anybody was ready or had insurance going into the holiday weekend. So what happens? Well, we come back and these markets really fall, and they fall really hard, and they continue to fall. I mean, all day it was just a straight off sell. Now, we're going to get to the charts here because the majors did find some support levels. It was just a gigantic surge, one big day. I've been talking over the last couple of weeks about I want to see the bears test these bulls. I'm not sure if that was a bearish test or if it was just the abandonment of bulls. The bulls got into a long holiday weekend. Maybe they forgot that February's options expired, and then here we are. So today's action is going to be very big, at least to me, when it comes to any continuation of worries or weakness or continued selling, because sentiment is still bullish and super complacent. I noticed something with Walmart yesterday. Walmart comes out, they beat their numbers by doing the same thing everyone else. They're closing stores, they're laying off employees, and they're projecting much, much slower numbers moving forward. Gap down, and it got purchased back up. So there's still bottom fishing out there. There's still bargain hunters out there. There's still some money on the sidelines. However, to see yesterday's move in general was very interesting. It raised my eyebrow saying, hey, there's not a lot out there to catch anything that doesn't fall. I don't think this was more of a selling pressure as it was just the abandonment of purchasing. There's my 2 cents. You're welcome. So we have a continued strong job market with an active consumer in the services index specifically, because I looked at manufacturing index and the services PMI. The services PMI is above 50. Now understand, any number above 50 shows expansion. The manufacturing for stuff or goods is at the 47 mark, which is still just below 50. So it is slowing. So inflation is still a factor, but it is off of its highs. The Fed sees it as going the correct direction, which is probably why they're going to take the gas off. But we do have some numbers coming out that might be pretty interesting going forward. Some of the things that I know that the Fed watches. Plus, there's a lot of Fed speak. Let's get there in a second. For now, let's get into your trade ideas. Now, folks, I dug through a bunch of stuff from the past few weeks, and I could only find a couple of bull trades that I liked. The neutral trades started taking directions. Doesn't mean that there's not some out there. In fact, let's go ahead and talk about one, because I think I pulled the chart from it. So I'm going to add it right here, TSLA, and this is one that Corey talked about yesterday. And it seems to be a stock that just weathers things. It weathers storms. It can handle pullbacks. It just seems to balance itself out. The big running joke is that Elon plays his own stock, right? He likes to buy it and sell it and manipulate it. Okay, whatever. That's fine. I'm one of those guys that make fun of it. But it is holding in there, so let's take a look at that. On the bear side, you just throw rocks. You can throw rocks and you can hit anything, and they are pretty good. AMGN and XEL both were from last week and the week previous. Coca-Cola also, I believe, was last week. CI I liked, ELV. OXY is breaking down, but it's at another neat level. So there's some pretty cool stuff to look at. So let's just get going, and we'll get started here with Ryder. Now, Ryder's just got a beautiful pullback, and that's kind of where I want this to go. That's kind of what I'm looking for. It had this nice gap up, and of course, it sold off with the rest of the markets over the last day or so, but I just like how this is sitting right at that $95 support level, and it looks like it's trying to put in this inside day. If you guys are familiar with that candlestick pattern, however, the day's not done yet. You can see that earlier today it had a shadow above the previous day, so maybe it can hang in there. Once again, let me say it again. Today's close, where we finish, is going to be big for me. It's this answer that we have to I truly believe some of the bulls were, lack of a better term, caught with their pants down over the weekend because all the hedges are out. So boom, flushed out, and it flushed out hard, almost 700 points down. Let's see if they run back to the area here. I've got another chart we're going to look at, which is the VIX, and they run out and start to buy more insurance. If that happens, then I think we climb back up to this level here, right? We're going to finish on the highs, and this would be a confirmed bull pullback. Let me get rid of this chicken scratch, and you can see here's the bull pullback, and if it closes above this high, it's confirmed. Easy target up at 100. If you wanted to play this a little higher with a diagonal, you could go to 102, 102 and a half, 105 if you want to go even further. I don't know how long I'm going to play anything time-wise. I don't think I'm going to be much more than a week and a half as usual. So there it is. I like that one. So here's Tesla moving straight down. I'm sorry, folks. I just looked at the R. UL looks good as well if you want to take a look at that. But Tesla, here it is. We'll see. I mean, it's got this area right here at 200. It's been really significant for it. It had. I'm going to call this the January rally. It absolutely had this, but this continued to follow through February, like most stocks did, up to the 220 mark, which is basically up in this area that we saw in October, and then it's slowly bleeding off. You can see that it did have the sell-off that everybody else did, but it wasn't as bad because it had already had a pretty good move up from Friday. So it's just parked itself above its 20-day moving average. Everything's in line, so you might want to look at something sideways. To bullish, I'd be fine with that. Its resistance is definitely here at about 219, and it's got support down at about 190. What do you guys want to call that? 190? I'm going to call it 190. Yeah. So it could chomp around. I would actually like to see it revisit this area. That might be a little bit more of a range. It is a large range, but it just seems to outperform. The Qs are one of the strongest since January, and you'll see when we see the charts, it's not even close to revisiting any of its moving averages yet. So if you believe that's going to continue, this might be a good place to park a couple of bucks just for fun. On to the bear side, there's just a lot. AMGN, this came out, I think it had its earnings a few days ago. If somebody wants to let me know, that's fine, but it didn't seem like it did very good. This is a gap up, sold down. Here is another small gap up, and it's selling down again. So it's trying to stick at this 240 level, almost creating a descending triangle pattern from that 250 mark. But I like this slope. This is just increasing, so it's steepening as it slips. My target here was probably going to be this 230 mess that I saw back in September and October, which is plenty with this. It's $7, $6, $7, depending on if it's going to roll over. What I don't like about AMGN is what I don't like about the markets. The moves up and then having to fall back, and then it gets gapped up and then having to fall down. A lot of the times you see markets behave like this, and it's usually just we don't want to fall yet until everybody can get in short, and then it just opens up the floodgates and falls. We see the same thing when it gaps down, rallies higher, the markets gap down, and then they regain and go break even. So that's kind of what I'm looking for in the overall markets. But when you see a stock behave like this, it's that same thing. You just got to be patient with this. And if you don't want to be patient, put on a diagonal. Play the 240, 235, and if it stays at 240, sell another 235. If it stays at 240, sell another 235. You can play that game. Or you can wait for it to break and really start to fall when the markets do, or with the markets, if and when they do, and just jump on a vertical or straight put. I imagine with AMGN's cost, it's probably best to probably put some sort of a combo on this. Let's move to CI. This is another one that I did like. Today's a halt. Now, Corey made mention of this on his end of day, and I absolutely agree. Even some articles I've read on CNBC and I've seen on MarketWatch, it's one of these things that when you get a sell-off of this nature, you're going to get that rubber band snapback, whether it's a day or two. Maybe it doesn't happen today. Maybe this is a fake out and we close down here. That's fine. But at some point, you're going to get a snapback. And we know that every time you see a fall like that, you get a snapback. Now, it can happen within a candlestick or two, especially depending on where the pattern develops. I do like that it has got a very solid resistance at 300. So I don't know if I want to target this thing down to about the 285 level, the 287.5, whatever you want to call this, or 290 even. But I'd like to play it below 300. So this becomes more of a credit spread, something like a, I don't know, 300, 310. It's a little bit too far out of the money for me. But yeah, play something just where 300 is your resistance. right? Or an area that you don't think it will exceed. And I think that might be kind of a fun trade. I haven't gone through it yet, obviously, but I'll look through and try to find something that fits my outlook on it. Another bear here. This is VALE. This came from Corey, and what I liked about it is I wanted to poach this one because I love when we're about to cross over, and I like that we are back to this floor. So it had this high base that it just blew below. Isn't that neat? I like that. It's below both moving averages, and it can't get above that 50, that pink line. Push-pull is very difficult. I'll say it again. This is that sell-off. It was shooting up, and then the markets just drug this thing down. But today we have the exact opposite. So you remember when I talk about, hey, I need to see a bearish move, and I want to see how the bulls answer it. Well, so far, this might have been it if it wasn't for the fact that we just came out of an options expiration, and the markets were due to have a pullback. What I hate about it, it's not a pullback, it's a fall off. It happens all at once. It'd be nice to get a 600 or 700 point, well, I should say 700 points down over 3 days. That is a little bit more uniform. But what sucks about these markets, it's just an abandonment of presence. And it just gaps down and falls apart in 1 day. So a 3 to 5 day pullback is now happening in 1 day, which makes me question the validity or the strength of the bulls that are out there. I do like it. I'm going to keep it on my watch list. Now here's the fun thing. I don't really have to guess where it's at now. What I can do is draw this line here. That's a little too long. But somewhere through all this stuff, right around this area, let's try this one. It's previous support, and if it trades below that, well, then I think that we've got ourselves an uptrend that has changed to a downtrend, and I want to be bearish because the overall goal is going to be somewhere back in here, somewhere around that 13, 14 level. All right, cool. So moving on to our market analysis. What have we done so far? Not a lot. It's been interesting because I pull these usually Monday, Tuesday, and Wednesday, so it's Monday to the current day. We didn't have a Monday, did we? So I went from Tuesday to today. So today's pretty much flat so far in the markets. We'll take a look at it here in a second. But you can see this correction was hard and it was fast. The diamonds, the S&P, the Qs down significantly, over 2%. On the Qs, to almost 2.5% on the Qs, but all down 2%. The Russells, 2.67, and that's actually pretty good because it's gone up a little bit today. It was actually almost 3 or just over 3. But oil caught me off guard because oil wasn't that far down yesterday. It's slipping a lot harder today, but gold's just kind of hanging in there. So let's take a look at the charts. Now what's tough about this is I wanted to see this move 2, 3, 4 days. Then it becomes a bull pullback, right? However, we could see a move to the upside that maybe touches the 410 and then roll back over. And I'll have to agree with kind of the outlook that we got here at Maverick is this could be this slow moving. We had a big surge into January. Now we have to take our time. When we start a downtrend, we break support levels, so on and so forth, and we can start that move to the downside. I still believe longer term, 6 months out, 8 months out, that we are going to revisit some of these lows, some of these 380, some of this stuff over here. I don't know if it's going to be aggressive and panicky or it's just going to be a slow bleed to the downside. What is tough to trade is when we see this crap, and I'm gonna put this against. I've got a VIX chart today, folks, but when these markets, even back in here, it was 2 days, and the VIX just flew to the upside, and it's a gauge, it's a rush to buying insurance. We saw the put-call ratio here. We saw the put-call ratio through this area towards the end of 2022. Now, what I'm going to look to, and you guys can just Google it, put-call ratio, and you'll get a chart. Let's see what happens here. Let's see if we get that same surge to the upside. I'll show you the VIX chart in a minute because we are so far climbing that tree. But we haven't broken anything significant. This was a significant break. This was a pullback, and so far this is absolutely just a pullback. So what I'm doing is I'm talking to my bears out there. I don't want you guys just to go 100% bear here. If you've got bearish positions, let's milk them. But I don't want you to just turn south on me in 1 second because of yesterday's action. Okay, well, there's my soapbox. Now, here's the diamonds. And I've been talking a lot about the Dow being the outperformer, and it was. I mean, check this out, folks. By the time we ended the year, it was above all of its moving averages. Well, the two shorter terms, the two majors. And it didn't really have its January rally, did it? But it was staying above these levels. I mean, these are, I didn't have it, but if you go all the way back up to those quote-unquote August highs, that's what this was. It touched it. So this chart is outperforming, but now we have something a little bit more ominous. This becomes this area of a channel that is at its lower level, right? We did have the crossover back, but it's only short term. These are both sloping lower. We could easily get a cross of these moving if we do break the support level. Now, Corey made mention of something on yesterday's update, and why I like to kind of correlate updates to midweeks to Friday classes is because we all have the same kind of conversation. Usually when you get tops aren't V-shaped. They're rounded. And so when I see something like this, I get a little excited, right? Because this might be that rounded top. And what's the first thing to drop? When an expected contraction in an economy is looming, quote unquote, is going to be your staples, the demand on energy, the demand on some of those things that create stability in the longer term. So this is going to be my first indicator of the economic slowdown if we get one. The Qs are on their own little kick, and let's show you this. The Qs are just flying high. I think the Qs are a little bit hard to gauge because this is the fear of missing out guy. This is that support level that every single Robinhood trader or every single new investor or everybody that was being bragged about on how much they made in the stock market in 2019, 20, and 21 missed out. So when you have the beginning of the year, you get this. And it has blown past its moving averages and blown past resistance. Now it's still nowhere near where it was in August. But I mean, look at the distancing between these moving averages. This is a surge. So this might easily fall back as fast as it gained, right? It's fluff. We know that. There's a lot of high expected growth, things of that nature. Through this last little bit through here, understand most tech companies came out and said, we're cutting jobs, we're closing factories, we're worried about a slowdown, we're expecting weakness. And nobody cared. They just bought into it. So this is going to be one that's going to be hard to gauge, so I'm just kind of going to leave that alone for a minute. And just focus more on what's going on in the overall markets of the economy. Now here's another thing that's kind of fun. So let's take a look at what we can gauge things on, what we can drive on. Remember that rally that we had, or the fall off, the correction that we saw in December? Well, here it is. And then we saw this. This was the huge put to call ratio. This is the volatility index, by the way, folks. This is when we saw everybody buy a bunch of insurance. And what did it do? It created a really good beginning of the year. Everyone was insured. Well, guess what we got today or yesterday? The same idea. Now the expectations are the same pattern. I would expect if everyone believes that we're going to be fine, we're employed, I'm going to show you the numbers here in a minute, we're employed, we're doing great, the world's fine, then you're going to see another one of these. That's exactly what we should see. However, if we get too complacent and ignore the fact that these companies are saying we are going to be very slow at the mid or end of 2023, then that's where you get your capitulation. That's where you get the fall off. That's where you get the fall apart. Do I dare say these? I mean, understand, these were some pretty serious moves. And I'll say it again. We're in a worse situation here than we were here. That's a fact. It's just the markets don't believe it yet. So it's going to be pretty interesting to follow along with. However, we cannot trade it until we see these moves. So there you go. What am I talking about? Well, let's get into the economic numbers. We've got nothing for the holiday, of course, but we have the flash PMI. And these are just flash numbers. They aren't the PMIs themselves, but that's the expansion that I'm telling you guys about. This is a service PMI. This is going to be going out to restaurants, going to hotels, traveling, going on vacation. This is expansion. Anything over 50 is expansion. Now, manufacturing wise, buying new cars, buying houses, buying uh, washers and dryers, buying anything solid has dropped as actually it has increased since expected, but it is below the 50 mark, which means we're showing contraction in that area. Home sales, I thought this number was going to fall a lot more than it has. It is lower than expectations, but not catastrophically lower. People are still out there buying houses, whether they're cash or not, whether they're going to be purchased with the expectations of refinancing in the future, I don't know. That's all speculation. So I'm seeing a very, very active consumer. We do have the FOMC Fed minutes. They're from February 1st. I think it's something that we've already heard. They've been pretty transparent, honestly, for the most part. So I don't think there's going to be anything that's going to be shocking. So moving forward, this is something that's just mundane. This stuff here, it gives me a headache. I don't like it. Whatever. Fed, every chairman's got their own speech, their own outlook. However, when it comes down to the whole group, if you see a majority a little bit more worried than maybe what Powell is touting, or a little bit more, I should say, hawkish, then you could have concern. Or if Powell's the more hawkish one and the rest are a little bit more dovish. That's the only kind of thing I take from these speeches. Past that, I just kind of throw them out. Because what are they looking at? Well, they're looking at the same numbers that are posted all the time, which we do have some pretty interesting ones. So this GDP, which is Q4 revision, 2.9, they're expecting it to be absolutely in line with where it's at. The other one, jobless claims, 194, 197, 197. So we need to see over 200 plus to see a slowdown in employment. But take a look at this expectation. Yeah, it's a tick up, but still nowhere near what we'd want to see for a contracting economy. So it's pretty interesting that even if this number came in line, that's not a win. It's still healthy, which double-edged sword, right? Consumer spending, I'm going to keep an eye on. I know that's not that big of a deal because we have the PCE index, because that's the one that Powell follows the most. And then that's about it. That's about it. We'll see what happens past that. All right, guys, let me pull the class because I'm kind of interested to see what you guys are thinking of. I've got two pulls now. Let's do the weekly outlook first. I'm going to launch this. Let me carry this over. What do you guys think for the rest of this week? And this is going to be a difficult pull for you, isn't it? Because we had a massive move to the downside after a holiday. So it's a shortened week to begin with. We're almost towards the end of the month, but we did exit an options expiration. So people have to be really running to March right now, or maybe go past it, go to April, go to May, to buy some insurance. If we're worried, people only buy insurance if they're worried. As soon as we get a market that's complacent, and let's see that volatility index because it does have a spike. You saw the chart, but it was not nearly as large as the spikes that we've seen in the past, is it? So is it complacency? The worst is behind us. Yeah, sure, companies say that they're not going to do well. That's fine. They're worried about an economic slowdown, but I don't believe it, which is easy not to believe because of what the consumer's doing and what employment's doing. No one's losing their job and everyone's spending. Hey, that's great. I love it. So that's kind of what I think the markets are trading at. Okay, cool. So collecting. Got about 90% voted. Let's go ahead and close and share. Oh, there comes somebody else. All right, I think we're good. Let's go ahead and close this and share because I want to do the other one. I want to do the longer term as well. So there you go. 53% saying we're going nowhere. 47% saying we're going to go down. 21% saying that we're going to go a little bit up. And this is just for the rest of the week. This is a few days. And I like that. So a little bit pessimistic. It's so difficult to have this class on this day because, once again, where we close is going to be huge. All right. Thanks, guys. Let's go ahead and hide that poll, and I'm going to go ahead and let's launch the next one. Let's see if I know how I can do this pretty quickly. Monthly. Aha. Launch. Okay, so here is monthly. A little bit more longer term. What are you guys thinking about? Past a week, 2 months out, 3 months out. Now, I look at the monthly outlook, but there's a lot of times, folks, that I actually incorporate quarterly. So if you ask me, hey Joe, what do you look for when it comes to monthly outlook? I actually kind of incorporate quarters. Like, well, taking into consider what we did for this earning season, I kind of calculate that into it as well. Doesn't mean you have to. It's just kind of preference. Okay, cool. Quick 90% already there in the first 30 seconds. Good work. All right. Oh, there's that 95. There's one of you out there. We're light today on the class, so I know that that last person that hits that button is that 5%. So thank you for putting that button. Okay, let me close and share here. And we are actually more bearish on the monthly outlook than we are for the rest of the week. Tells you something, doesn't it? 63% on the bear side, 26, 21, and 21 on -2. We're definitely leaning towards that -1 area. Cool, guys. Thank you so much. Appreciate it. And I am a little different, and here's why. I have the below the 20-day moving average, which is red, above the 50, and a slope that is orange. I have to be 0 because this, to me, is a deeper pullback. And I hate to say it because I will slide this. Let me get my pen out. I will slide this from here to here if this breaks. If that breaks. So what's cool about this, my day-to-day or week-to-week trading, my shorter-term outlook, I'm a 1 week, 2 week guy, 1.5 week guy, is going to be sideways to down, sideways to up, or just sideways based on my weekly outlook. However, if this trend, if we do get this, remember, this rounded moves when the markets fall apart. Well, I'm going to be in bearish before this point right here. But if I start to see this really fall apart, I want to see the volume increase, and I want to see that volatility spike up and stay up. I don't want to see the pops that we saw here. This is a volatility spike. That's a volatility spike. I want to see it spike and go up and up and up like we saw way in the past. Then I can easily go from a +1 to a -2. And that's one thing I love about being kind of a shorter term trader or actively trading is I can do that. All right, guys, thanks. So sector analysis wise, guess what? The strongest sector was consumer defensive, which I had a short position on. So that didn't really work very well. Let's take a look at them. Consumer defensive, this is from Wednesday to Wednesday, and the weakest is energy. Energy and technology. And technology is the weakest, and I believe because what happened yesterday was a lot of it. But and technology was probably the strongest sector over the last month. All of January, it was leading the way. So it's just kind of flip-flopped on us. The expectations were for some sort of a correction, and it's exactly what we got. So far, it's just a correction. So here's that consumer defensive. This is a bearish trade that I really, really liked as it broke down below here. My expectations were if there's a breakdown below there, and it didn't. It chopped around on me, and that's fine. It's still bearish. We still have the crossover. It's below the 50-day moving average. We still have, let me clean this up here. We still have the resistance at that 74 mark. I can take it all the way back here if you guys want. 1 or 2 days above it, especially when it comes to an ETF, doesn't bother me. A little bit of pokes above it. So this could easily stay within this channel of 74, 72. A nice breakdown below that would be good for the bear side. So it's a little bit sideways. Although this is the strongest sector this week, and it doesn't look too strong, does it? That's what I thought. All right, so let's go to the weakest, which is energy. And you guys have heard me tout this before many, many times, that whenever you see energy, industrials, materials, things, the day-to-day solid stuff start to bleed, it's usually worries of expansion and growth in an economy. This isn't, you could blame the Ukraine war, talk about that and the Russia situation. For sure, there's some manipulation that had happened there. But if there's going to be a general expectations of a slowdown for all of that, then you start to see things like this. So it hasn't quite broken its support level, but boy, you could see how this thing fell off. And it's not getting, and this fall off was Friday. Friday's candle was strong in the rest of the markets. It didn't sell off too much more like everything else did, but boy, it sure is not participating in the sideways move, or I should say an upward move if we get one so far. So it's kind of glass half full. Awesome. All right, quick conclusion and let's go out. I know we don't have too much to look at, but I thank you guys for your participation. So the markets fall hard and fast with corrective action. How do I take it? Well, for me, I've been touting I want to see the bears step in and see if what the bulls do to it. And so far, it wasn't really a bearish step in. It was the fact that the bulls just are complacent and weren't participating. That's how I'm seeing it for now. The reason being is because the volume's not there. This thing fell apart. The volatility did increase, which means maybe somebody's out there buying insurance. So is this a follow through? If we get if the market rolls over and starts to fall apart now for the rest of the day, okay. Now it supports the levels that can break, and then we can go full bear. And I did full bear in quotes because you should never really be full bear or full bull, but we can add more bearish trades with confidence. But is this just another round of insurance buying that people forgot to do before the holiday weekend? We'll see. If we can erase the majority of yesterday's move, or we can start to climb back today into tomorrow, then that's exactly what it was. It was just a hiccup, and we're probably going to go retest some resistance levels. I believe that sentiment is 100% still bullish. I do believe that there are a lot of people that are comfortably invested, especially after January's move, but still untested. We'll see what happens when we get that first test. FOMC minutes today, lots of Fed talk this week, blah, blah, blah. I don't put too much on it, but it is kind of nice to see how many Fed seats agree and how many disagree. When you get Powell coming up and saying, hey, you know what, I'm going to be a little bit more dovish. We're not going to do a 50 basis point raise. We're going to do 25 basis points. But you have a slim margin of that vote, meaning barely the majority agreed with him. There's something to worry about. But if everybody agreed with him, then they're seeing something that's probably a little bit more passive. We do have the GDP revision. I don't know if that's going to be an impact, but I imagine that being in line or even slightly higher, to tell you the truth, just because I've seen less jobless claims and a consumer that hasn't stopped being active. We do have another jobless number. We have the PCE that the Fed uses quite a bit. That's a hard one for me to gauge because there's 4 different situations for it. There's 4 different ratings: short-term, mid-term, expected future, all that stuff, whatever. And then we have the consumer spending number that might be interesting. That one's basically, you just go around and they gauge credit card debt and basically the consumer's activity. If that doesn't slow, well then nothing else will. All right, that's enough. I think I'm done talking. Let's go out and look for some trades, shall we? First off, there we go. These markets are climbing back from yesterday's move. It started a little bit ugly, didn't it? It looked like we were going to roll over and fall apart, but no, we're back above that median line. Already putting in about 0.25% across the board, even 0.33% there on the Qs. Okay, let's see how we finish. All right, let's get going here. Okay, Brett, let's start with BAX. These are tough days to trade, yesterday from today. I've had a few conversations with a lot of traders that were excited that all their bulls expired on Friday because the markets fell. I've got some bears that are super happy because they're doing well with that first fall. It's kind of these things that you just kind of let your positions work for you. Finding new ones can be difficult, especially when you have a 700-point drop in the Dow. And we might get, I don't know if we're going to get a 700-point move to the upside, but we're going to get some sort of a bounce, maybe, or we roll over and fall apart. It's pretty difficult for new trades. Brett's looking at a February 24th, which is week 4. It's got to be week 4. March calendar spread. Let's take a look at that. 40s. Yeah, it is a calendar spread. This is his landing page right there. His expectations are, yeah, you're probably playing that, aren't you? Playing this gap down. Oh, this is the gap actually from here to here. But it's neat to where you have a range of the gap. And that's the high and the low, and you can play anything in between it. So he's really believing that's resistance there at about 42, and it might find its median here at 40. I like it. Remember, folks, the calendar spread's a sweet one because it does give you a tent, right? I mean, it does give you a pretty good range here to make a couple of bucks. If this is 40, right, then, you know, a little bit lower, a little bit higher, it doesn't matter. He just wants to be somewhere, right, somewhere in here, or importantly, somewhere in here. Good trade. I like it. What's cool about the calendar, and I've said this before, over the butterfly is you can roll it out, right? He's got March. If he could do March week 1, if he's got March week 3, he could do March week 2. At that point, it's almost a slanted vertical spread, but yeah, adjustable. I like it. Let me write that down. It's going to be BAX. Yeah, I'm just going to put it sideways. But I mean, I like it bearish as well, just because it's gapped down. But I'm going to put it straight sideways because we're going to play this channel through here. I think that might be the best approach. Cool, thanks, Brett. And I think you've got one more here. Let's take a look. It is CNC. Well, let me zoom in first. I like this. I hope you're bearish on it. Let me read. CNC 75 put. Yes, very nice. If you can afford it, straight puts and calls are a lot more easier to deal with. But I do like that. I like this trying to stay above it. Look at the slope of those moving averages. Boy, try to do this once here. Try to do it once there. It's nice. Got a good target there, 70 for all you guys that are thinking of a target there. 75. He's in the money there. Nice and juicy. I like it. CNC bear. Oh, thanks, Brett. Looks like you've got one more. This is BK. For a long time, folks, I thought BK was Burger King, which would make the most sense, right? Not a bank. Oh, well, what do you do? 51.52 bull call. Easy. Yep. Yep, I'm going to write it down. However, you know exactly what I'm going to say, don't you? Wait for the confirmation. Let's make sure it turns first. In fact, what will be even better for your situation if you're not in it yet is for this to go a little lower, give you a nice little shooting star, buy this bad boy at like 50, where it's at now, but where it comes off of like 49, and get it at 50-50 and shoot it up for 52. But yeah, I definitely have it on the bull watch. Just be patient. Wait for it to turn. Thanks, Brett. Great trades. All right. Put call ratio is this what you expect? Oh yeah, put call ratio. I don't know if I can get it here. Do they have the put call ratios? Let me type this. Have you ever done this before, folks? Put call ratio. Sometimes it'll give you like a list of things you can pull from. I don't think that Finviz is going to have it. However, Scott, if you want to give me a breakdown of what you're seeing, that'd be cool. So it is $CPCE, and it's got this put call ratio thing. I don't have my Thinkorswim running because if I do, it bogs this class down. But yeah, keep an eye on that, and you'll see in some of the past. I think Corey's taken a snapshot of it. I know I have. Actually, I think I did in one of my end of days. Keep an eye on it. What you're looking for is that huge spike. I think the biggest spike that we saw was December into January. It was huge. It was like 2.5, 2.6 to 1. It was crazy how many people were buying it. So yeah. Yeah. Okay. Yeah. Sure, Mespin. For sure. Thinkorswim will give it to you. And thanks for sharing that, Scott. It's $CPCE. Otherwise, I've Googled it before and I've found a couple of online charts they'll give you for free. But yeah. All right, Dale. Let's see. Oh, PEP. This has been on our watch lists before a few times. Okay, what do you got on this? From bull pullback above 50 MA, long call question mark? Yeah, well, let's wait for a consolidate. One thing that's interesting about this, and let me go through here. PEP was on the bear watch back on the 25th of January. Right, we're definitely right here. We were on the bear watch. We wanted to break down, and it didn't. So could this be on the bull watch moving forward? Of course it could. Check this out. So we've got support there, moves up, support here. It has an ascending triangle pattern. I would be super patient. because understand the 20 and the 50-day moving averages are inverted. They're wrong. But this slope is very promising along with the price action. So if you wanted to play something super bullish, 178-ish would be my entry as an ascending triangle breakout. And I think that's what Daryl's got going here. He said long call question mark above the 50. And yes, sure, it is above the 50 now, but I would be a little bit more hesitant. Let's make sure it gets above that point right there. Let's put it down on the bull, though. Let's put it down on the bull. Thanks, Daryl. Cool. All right, James. What do we got here? DHI. Let's see if I can go read this as fast as possible. Looking for a pullback into the 50-20 AM. Vertical spread, straight, long put, learning towards the late much weekly, maybe April 71st. Let's start with the pattern. Then I'll see what you're looking at. Whoop, wrong way. Let's zoom in on this. Okay. DR Horton, right? Residential construction. Okay, they should be slowing down. Not only seasonally, but right, the home sales getting a little bit out of whack. Okay, I like it. It dropped fast. The slope's looking good. It's below both moving averages. You might want to, once again, expect a little bit of a bounce. This might probably be earnings or just the fact that maybe they're not doing very well. I'm not sure what. Let it settle. The first thing I would say, let it settle. If it's going to have a bounce, it's going to have it in the next few days. Where it goes to, does it stay below this, which is the 50-day moving average, does it get back up to 95? Just let it settle. If it starts to show an inkling, I should say, of starting to slip, then yes, you might be able to get into this. And let me get to what you're looking at, or some of the things you suggested here. Vertical spread. Now remember, verticals will lock you into time. A straight put gives you flexibility. So if it starts to slip with the markets, a straight put might be a little bit more expensive, but it does give you the ability to take it at 87, 86, things like that. You don't have to sit through a 90, 95, 85 vertical spread. The diagonal is also adjustable, but you're still kind of locked into that first expiration cycle. And what you're talking here, 97.5, 90. Okay, that's deeper in the money. Sure, 90, that's good. That's fine. I'm fine with that. Those would be good strike prices. Somewhere around there, shooting for the 90 where it's at. That's a trade that Rob loves to do. He loves to sell pretty much at the monies, because even if they slip, you're so deep in that trade. Let's do this. Put, right? So put goes this way, right? You're so deep in that trade that it doesn't matter. I mean, if it falls, you're still making some good money, and that's what's interesting. Most of the time, Rob will have. I mean, this risk graph will be more like this, but the cost is a lot. It's basically taken 20, 30 cents off of a $4 call or put. But hey, it's still 20, 30 cents. Also considering a longer term out of the money long put, but wait for more data. Sure. Now that's slow played. Think about if you did like a 90 put. If you're going to slow play it, and I kind of think of, actually, folks, I have a very similar situation. I bought a $25 call on the VIX last week. Out of the money. It was 100% risk, 100% reward, and I just threw it out there. Just because I was thinking things might get a little bit weak, so I just threw it out there. But it's 100% risk. You're going to lose all of it. I don't manage it. It's in May, and once it hits target, you're out. So that's totally fine. But you'd better be shooting for this, for 80, for 75. That's when you do it. You're shooting for this thing is just going to get mashed. And it's going to get mashed fast, and then I can go ahead and cover it and move forward. So, yes. There's a few different ways to take a look at the chart itself. Let me put it down as a bear, though, because I'm just kind of interested to watch it with you, James. Okay, let's move forward here. Delta Airlines for Robbie. 38.35 bear put spread. Target of 35.25. Oh, gotta zoom in first. I keep forgetting this. Just imagine my charts would zoom in by themselves by me just looking at it, right? Okay, let's see. Spread expires 38.35. Okay, draw some lines here. Expecting it to get lower than that though, right? Or no, 35.25, just shy. Okay, he's looking at probably just below 36-ish. Maybe back into here. I like it for a couple of reasons, and I don't like it for one. The reason I don't like it is because it hasn't broke the 50-day. But what I do like about is it did hit its head on that 20. I do like that a lot. A short-term target with 36, if it breaks the 50, that's fine. But your target down here at 35.5, totally cool. Totally cool. Let me write that down. All right, thanks. Okay, how far am I? Yes. Oh, hey, Sebastian, how you doing? Let's see, he's got a, looking at Alcoa. Zoom on in. Okay, interesting. Bull pullback, triggered today, 31, March 49, 3 March 53, diagonal call spread. Whoa, 31st and the 3rd. Okay. Week 1, March, week 5? How many weeks are in March? 5 or got to be 5, right? So, okay. So he's spread out there a little bit. Let's draw the lines. 49.53, diagonal call. I think you're playing a bear or a bull flag on there, aren't you? So let's see, 49 for fun here. Right about there, and a 53, right about there. Well, yeah, you can make a bull flag pattern on that. I'm fine with that. Breaks out of the upper Bollinger Band for sure. I'm fine. Okay, let's put it down. Right? Looks a little weird when you take a look at just the support and resistance, because if Alcoa can get back above this level, that's a big one right there. Right above that 50. I just drew a line through it. Is that 50? Yeah, 50. So if it can get back above it, being above the 50-day moving average is really nice. So if it can toy with this and push those upper Bollinger Bands, which I imagine, kind of look like this-ish, right? Then you will have a nice little breakout to the upside. Thanks, Sebastian. All right. Oh, here comes a good question. Right, Dan? Should I have kept my wing shares from a week ago? Let's find out. You know what I'm very good at, folks? Hindsight. Never been wrong. I've never been wrong after something happens. So hopefully somebody got that joke. Parabolic craft earnings might pull back and consolidate, which breaks out loans. That's a tough one to play. Let's zoom into it a little bit more. It's because at that point it's an earnings play. Wing has been our bull watch, Dan. In fact, I thought, didn't you bring it to us a couple of weeks back? I liked it. Since this move, this breakout, and it's been pretty strong. Pulled back, another good move there. This is tough. If this is earnings, don't kick yourself. Yeah, don't. You had to sit through it. And here's on top of which it's coming straight back down. So, yeah. I think Dan said it was the piercing line that he brought it up with. I believe you did. I remember hearing it a few times, but I did like this. That was nice. So even back here it was pretty decent. I'm not sure when we started talking about wing, but that's a coin flip. That's hindsight. Won't worry about it. I mean, it might suck. Maybe you took a small profit or broke even or even a small loss, and then you get this. But, boy, can you imagine trying to unwind this bad boy today when you're at 190 and now you're at 180? Good luck. So chances are it might come all the way back down to support. And if it does, and it's good news, this is something you can revisit. All right? You can always trade it again. Robbie. No. The Delta trade's good. Yeah, okay, good. All right, good. Okay. Looks like that's about it. I didn't think there was going to be much. These are difficult days. Midweek's a tough class. I think the whole reason why we implemented a midweek update is because the middle of a week is usually the hardest to trade. Thanks a lot for giving me that class, guys. Right? Jeez. All right. So what are we doing? Tapering off a little bit? Just about up 1/4% on the Dow and the S&P, and just sitting at just shy of a half on the Nasdaq. I'm not shocked by that. I don't think we go too much further. Oh crap! I'm a little bit past time, folks. I got to cut you loose. But anyway, we'll do one more. COP. ConocoPhillips here for Justin. 105, 100. May 3rd, 31 a diagonal. Yeah. Beautiful little bear rollover. Look at this thing. Right down here to 100 where it had a little nugget. I like it. Let's put that down. COP. Okay. That's good. Let me tighten these up and cut you loose before I get a nasty message that I'm taking up too much time. Here's our list. Hopefully you guys have been following along. If not, you can pause the video after I play it again, but I got to cut you loose. So I do like these trades. I think they're great. Thank you so much for participating, and we are going to see you guys next time. Bye, folks.